Hello, and welcome to Mali Investment Talks once again. My name's Joseph Areu. I am your host. Mali Investment Talks, as you may recall, is a series of talks that I will be giving to help investors, potential investors, to help people to manage their own personal finances. In particular, the aim is to help you to make your money work for you as you do whatever it is you do in life. So, welcome once again. In the last few episodes, we've been talking about short term lending as a goal. That means investing in the short term, 1 year or less, for purposes of earning a decent return, but making sure that your investment is one, very safe, so minimizing risk, and number two, it is liquid. Liquid meaning at any time you need your money, you can access it. So those, remember, are the two principal priorities for short-term investing. In the last few episodes of my discussions on the subject of short-term investing, I've been mostly talking about the options that you have, the assets, the asset classes, or the instruments that you can consider for purposes of short-term investing. In other words, I've been talking about the do's of short-term investing, namely, consider treasury bills, consider fixed income or fixed deposit investments, and consider money market unit trusts. Today I want to talk about the don'ts, or more specifically, what are the issues, the things that you need to be careful about. You need to tread carefully around when you are considering investing your money for the short term. Again, remember, in the short term, the two main issues are avoiding risk and making sure that your investment is liquid. You can access your money anytime. So what are some of the issues or some of the investments that you might want to tread carefully if you want to invest for the short term? Number one, equities or shares. If you are investing for the short term, 1 year or less, you might want to be very careful about investing in shares. As good as it is, and we shall talk about shares, shares have their own benefits. But if you're investing for the short term, you would want to be very, very careful. Number one, shares are risky. They have a much higher risk profile than that which a typical short-term investor would be comfortable with. Number two, shares may not always be as liquid as you would want them to be. What does that mean? Suppose you need to access your money quickly within the 1 year or so that we talked about. You may find yourself struggling to sell those shares depending on the market that you are in and depending on the particular company whose shares you bought. So in that case, your share could be an illiquid asset, and that would not serve your short-term objectives very well. So while I can't stop you from investing in whatever you want, you just need to be aware that shares as a short-term investment asset or asset class may be a tricky one. Number two, corporate paper or corporate short-term investments, meaning, so last time we talked about treasury bills, you remember, and that was a short-term loan to government. But what if it's a short-term loan to a company? Then it becomes what we call corporate paper. Now, the risk profile or the level of risk you expose yourself to when you are lending to a company is certainly going to be, or is very likely to be, higher than the level of risk you expose yourself to when you are lending to a government. So if you need your money in the short term and you want to make sure it's safe, I would urge you to be careful when you are investing in a corporate paper. Or even when sometimes you could go to an asset management company and then they are selling you a unit trust. You might want to check, where are they investing your money? So if some of your money is going into corporate paper, well, you might want to think a little about how safe or how liquid that is going to be in the short term. Number 3, unit trusts. Unit trusts are good. Money market unit trusts are basically good and safe. But sometimes an asset manager might offer you other types of unit trusts which invest some of your money in equities. That essentially would not be a money market unit trust, but I just need you to be aware that where a unit trust invests in equities or in shares for that matter, it raises its risk profile a notch higher, and that could become a little bit uncomfortable for you as a short-term investor. So please be aware of that. Finally, I would say be careful about, say, putting your money in speculative real estate, for example, deals. In our part of the world, people sometimes put money in short-term or speculative land deals. For example, you put money, buy a piece of land, and then you hope that it will appreciate within a few months. That is not a very safe investment option, especially for the short term. In the long term, yes, you can make money, but if this is money that you cannot afford to lose in the short term, then I would urge you to be careful. Next time, we shall be talking about another investment goal, which is different from short-term investing. But for today, thank you very much for listening.